Andy Brough, Executive Director at Schroder Investment Management, and also Lucy MacDonald. She's the CIO of Global Equities at RCM. And Andy, a couple of weeks ago, said the dividend was safe. How disappointed were you, Andy, this week?
Well, it just goes to show, doesn't it? You know, you get them right, you get them wrong. Yeah. And at the time, we were looking at SIT, and you kind of probably didn't really fully appreciate the anger of the American people. And although 20 billion is an affordable number for BP, and they're going to still pay the dividend, quite rightly, Hayward, after all the pressure he's come under, and the board have said, well, look, what is the point of throwing even more oil on the fire, to give the pun, and really annoying Obama and the rest of them? Would you be surprised if the dividend then wasn't reinstated a year after, next year, or could this go on a couple of years? It's my chance to, play double jeopardy. Well, you look at it, the dividend's like $10 billion a year. That's what it costs BP. Yeah. So, in all the estimates I've seen, and I've sat down with our oil analyst yesterday, John Coyle, and we were going through just looking at what all the, if everything went horribly wrong, and if you didn't pay the dividend for 6 years, right, and so you had to pay $60 billion to clear up the whole mess, you've still got a business which has got an NAV anywhere between sort of £6 and £9 a share. So, the trouble with big numbers is they are very, very emotive, and they frighten people. I mean, they frighten fund managers when they look at it and think, my God, the clean-up costs could be huge. Yeah. But, this company does, it's not like last time. Last time it cut its dividend, it had gearing of 100%. And that was the bottom for the share price. Lucy, you don't own BP shares. What would it take for you to start thinking about buying some?
Well, we are thinking about buying some after the fall in the shares. And I think as far as the fear is concerned, I think we're probably past the worst of that. And we've moved some way into the uncertainty of the eventual liability. So we've got some numbers to go on now, is be able to price that. But that's only an initial, stab at it. And the fund that they're going to be putting up into escrow and funding through their asset sales and dividend cuts, and the capex cuts, that is not necessarily the final number, as Andy said.
So how low would the shares have to go before you get in there? I mean, is it just a price issue, or is it?
It's not just a price issue, because I think as far as absolute valuation is concerned, I think we may have floored it now. Yeah. But the question is now, you've got still quite a lot of uncertainty, but past that, you've also got the uncertainty of about their potential growth going forward, and how easy it's going to be for them to get new licenses from the US. So there's quite a lot of uncertainty about their business going forward as well, which is quite a difficult one to value. You'd pay more to know more, wouldn't you? Yes, I think that's probably right. So I think it's not, you can see that there is absolute value there, you think. But as far as really wanting to take a position there, when you can buy an oil share somewhere else, basically buying an oil share, you're buying the reserves and the production growth. Well, you can buy that somewhere else, without taking on these liabilities. So I think, on balance, I'm still, on the cautious side, but we're definitely looking at it.
Andy, in 20 seconds, how did Tony Hayward do yesterday, do you think?
It was a bit like watching a scene from The Godfather, wasn't it? I don't know anything. I don't know anything. I thought, we were talking earlier, it looks like a young kid being told off. He's got that unfortunate face that he could probably do with a few lessons in sincerity training.
Andy, thanks. Lucy, thanks.